Well, thank you very much, ladies and gentlemen. I'll just do a very quick introduction to our panellists, some of whom you will have already met earlier through the conference. So just very quickly, to my very far left, and to use a line from my editor, possibly politically, we don't know, we'll find out, is Joe Belladonna, Managing Director of Harena Resources. Joe's, prior to Harena, was the Chief Financial Officer for, I think, more than a decade at Western Areas, a very successful nickel producer here in Western Australia. Sitting next to Joe is Kate Apostolova, who you wouldn't have heard throughout the conference. Kate's an international arbitration lawyer with Clifford, a very well-respected law firm in, I guess, many corners of the globe. Thanks for joining us, Kate. Sitting next to Kate is Simon Hay. Simon Hay is the Managing Director of Lithium, and prior to his role at Lithium, he was the Managing Director of a company called Galaxy Resources, which is now part of the Arcadium Lithium stable, got lithium operations all over the globe. Sitting next to Simon is Obadiah Simon Nurkam. I apologise if I got my pronunciation very wrong there, but you would have heard from Obadiah the other day. He's from the Nigerian cadastral system, and we're looking forward to getting some insights on what Nigeria is doing in the critical mineral space. As you can see, it's a big panel. We have, sitting next to Obadiah, we have Brad Rogers from Jupiter Mines. He's the Managing Director there. Jupiter is one of the largest manganese producers on the ASX. So in fact, I think you might even be the largest pure play manganese producer on the ASX. Big operation over there in South Africa. And then last and certainly very not least is Krista Mhingo, who is the Director of Azurite Management and Consultancy, and also plays a very, very important role as sort of the on-ground person in Tanzania for EcoGraf. So we'll get underway now. Thanks everyone for joining us. It looks like we've got a good little group here to discuss critical minerals. I'm going to start obviously with Joe right on the very end there. Joe, as you're probably aware, that we've got this little interesting dynamic in the critical mineral space at the moment where 12 months ago, everyone wanted a piece of critical minerals, but 12 months later, the market sort of perhaps lost a little bit of appetite for critical minerals, whereas on the other hand, governments around the world seem to be very, very hungry and have only grown their appetite for critical minerals. What have you made of that sort of pendulum shift?
Yeah, it is an interesting, I guess, a dichotomy at the moment between future-looking demand drivers that we're seeing through, defensive industries, especially rare. Well, I'll focus this around rare earths, which is where Harena is focused on. But there's that future demand outlook, but markets aren't pricing that in at the moment because there's no lack of supply currently in the market for certain minerals, not all minerals, but certain minerals. Rare earths at the moment are trading at a relatively depressed price, although there has been some good trading in that over the last few weeks. It's starting to actually gather some momentum there. It's up about 10% over the last month in that pricing range. But as you say, governments are now looking at how they decouple their supply lines from single sources of origin. Post-COVID, we had a lot of material that was locked up in shipping shutdowns, COVID lockdowns. So people are trying to diversify their supply lines, and to do that, they're going to need to provide some incentive pricing for new companies to bring on supply outside of the traditional lines of specific commodities. There's a few, like China refines 95% of the world's rare earths. So if governments want to incentivise people like Harena to bring fresh product online that's ex-China, they're going to have to potentially underwrite price, or they're going to have to look at how they can subsidise developments to lower their capital costs and enhance the returns for private investment.
Yeah, fantastic. Thanks, Joe. And Krista, we were having a little bit of a chat just before this on a similar sort of veins, but in particular around managing expectations when you've got obviously governments are pretty hungry to get these critical minerals developed happening, but at the moment the prices are depressed. How are you managing things on the ground over in Tanzania around the expectations that the various stakeholders have over there?
Okay, thank you so much for a good question. I think one of the issue that the government and mining companies are facing at the moment is the volatility of the critical minerals prices. I think we're all aware that over years, the mining industry has been focused on the precious metals. So critical minerals worldwide is a very new commodity. And so the prices for critical minerals are dependent in a lot of factors. It's quite different from precious minerals. So how do we manage our expectations in terms of preparing to create a future with the critical minerals, which is a very important factor in energy and technology as we are going forward? I think it's just to create a pattern, because just one single announcement in the EV manufacturers, it affects maybe the whole nickel price or the whole graphite price. And it even might bring some closing of some of operations just due to just one announcement. So I think it's important that the government and mining companies collaborate to create a proper pattern that will help the companies to understand the ups and downs of the critical minerals prices.
Fantastic. Thanks very much, Krista. Brad, if I can ask you now as well, we've seen a lot of Western governments in particular offer incentives for critical minerals developers around the world. Has that in some ways been a bit of a lifeline for companies that are focused on that space, given this current pricing malaise we find ourselves in?
Yeah, I mean, yes, we're looking at square brackets, putting our project in the US. We would like to do as much value adding as we can closer to the mine. There's an evaluation framework which you go through when you're looking for an economically ideal place to put your conversion infrastructure, and a lot of that does point towards places where you can get grant funding. Ultimately, what we're talking about doing here in all of these critical minerals is building very capital intensive infrastructure. It's not mining, it's chemical processing in most cases. And in the case of our particular project, it will need 430 million US of capital to build a conversion facility to take our manganese ore and convert it into battery grade manganese. So grant funding does materially assist in that regard. I think the biggest thing though is certainty around volume and price, and really kind of we view this endeavour as infrastructure-like, and so grant funding is an important driver, but ultimately what we've been talking about here is markets that are quite nascent from a volume perspective and price perspective, and prices are volatile because volumes are thin. The demand that we're all shooting for isn't here and now, it's in 5 or 10 years' time. And so in order to get the certainty to invest in that infrastructure, I think more than grant funding actually, the most important thing is having sufficient volume and price certainty for the longer term so that you can fund that. And if you have that, you'll be able to find the funding. If you don't have that, it's not worthwhile investing in my view, because the risks around volume and pricing, whilst you have all of these markets growing off a very low base, are too unpredictable. And we're seeing that across the critical minerals complex right now. So grant funding is really important. I think the most important thing though is actually customers standing behind their volume and price requirements so that developers can have the confidence to invest, and that does include grant funding as well.
Thanks very much, Brad. Very insightful there. Simon, perhaps if I can also just quickly throw it to you as well. Leo at the moment is on the lookout for some new projects and new opportunities. Do those sort of incentives, are they something that you take into consideration when looking at potential project acquisitions?
It's one factor, but it's not the main factor. I think for us in a mining, you go where the resource is, so that's the primary factor. It does play a part, but I wouldn't want to rely on incentives, and our experience in Mali certainly shows that with, we had construction incentives for the development phase. We were exempt from customs duties, and that was removed by the government for, they're under financial pressures. And, the capital structure of the company and our JV partner was strong. The capital for the project was moderate, so that the project wasn't put at risk due to that change in incentives, so I wouldn't want to rely on it. But secondly, similar to what Brad was saying, I think For us, for critical minerals, it's also access to market that's really important. So whether your product qualifies under the Inflation Reduction Act in the US, under the battery passport in Europe, there are other incentives at the other end of the value chain that you need to take into account.
Excellent. Fantastic. Thanks, Simon. And yeah, we will come back and touch on some of the, I guess, the trials and tribulations that Leo's had in Mali in a little while. Obadiah, if I can sort of come to you now, does Nigeria have any set sort of critical minerals policies and the like that you're sort of putting out there to foster development of the critical minerals in your country?
Thank you very much. Yeah, my country, Nigeria, has good policy for development of critical minerals. Recently, we are updating our mining policy, which is providing a very robust condition for miners or investors that are interested in critical minerals in Nigeria. And you will also be aware that Saudi Arabia has instituted a policy or a forum, which is a future mineral, and Nigeria has been participating at least in this forum. Yeah, and so part of the policy that is by my government is the fact that the investors will be encouraged, okay, to invest in Nigeria.
Fantastic. Yeah. Oh, thank you very much for that. And Kate, sitting patiently there, I'd like to come to you now. Obviously, you just heard the explanation of what Nigeria is sort of doing to develop its critical minerals industry. Not all African countries, though, do have those policies in mind, and they're often still very much in their infancy. Is this a potential hindrance, maybe, for the development of critical minerals if the processes and the legislations are not set out and, I guess, a little bit of a moving feast?
Thank you, Michael, for that question. I think it potentially is. Obviously, Africa is rich in critical minerals, but it hasn't realized its full potential yet. And Africa cannot do it alone. No continent can do it alone. So foreign investment is quite important to realize that full potential and to grow in the critical minerals sector. And what foreign investors and mining companies are looking at when they look whether to invest and decide whether to invest in a country is that legal regime, that certainty in the legal regime. And the more concrete and stable legal environment there is, the more likely a mining company is going to invest in that specific country and is going to spend the time and resources needed to develop a project. And I think African countries can do that at two levels. At the national level, by having a well-developed mining code or a mining act that is well-balanced, giving mining companies the economics to develop the project, but also providing governments with the ability to regulate the critical minerals sector, given it may raise issues of national security. Some countries, including Australia, have found that having a separate foreign investment regime for critical minerals is also helpful because foreign investment in critical minerals may raise issues of national security, so it's at the level of entry where the government would do some due diligence on the mining companies and determine if they would like to have that specific company develop that project. And at the international level, it's quite important for African countries to develop bilateral relations with other countries, and that is generally done through signing investment treaties between two countries, which provide and guarantee a certain treatment to foreign investments, such as no expropriation, no taking away permits, fair and equitable treatment, which is quite broad protection that mining companies can benefit from if their country has a bilateral investment treaty with the African state where they are looking to invest. So it's quite important, I think, to have a stable and a well-developed legal framework around critical minerals.
Yeah, well, yeah, and just touching on that, Kate, obviously, is that it all often really starts with the mining agreement, and so that the terms are set out in play there. Like, when about should that come into effect, do you think?
The mining agreement, I think that's provided generally in the mining code when that will come into effect. It's probably after the exploration when the mining agreement that sets out the rights and obligations of the mining company in relation to exploiting the particular mineral. And that is also a quite important agreement that mining companies and governments should carefully negotiate. And in particular, if there is no investment treaty between the host country and the home country of the investor, it's very important to include those guarantees of no expropriation, of fair and equitable treatment, of no discrimination, no taking away the permit to provide it to local companies. And we have seen several African countries which has also imposed export restrictions to critical minerals, and I think it's important in that agreement to state that there will be no export restrictions to critical minerals, given that's how a foreign investor gets a return to their investment, right, by exporting it and selling the mineral as well. So it's a quite important agreement to set out the legal obligations on the state and the legal rights of the mining companies.
Yeah. Thank you, Kate. Joe, I could see you're nodding quite feverishly there. Obviously, you're in the process of getting a project up and away and hopefully one day bringing it into a mine in Madagascar. But obviously, rare earths are in fair demand and these sorts of things. Have you started to have discussions at a country level around what might happen to the minerals in terms of how they're processed and even then the potential markets that they eventually find their way into?
Yeah, that's right. Look, I'll just echo the comments around certainty and stability of policy and frameworks for operating in any country. It's not particularly Africa. It's any country that is trying to attract foreign investment. Stability of policy and a strong legal framework is absolutely key to get international investment into any country. But just coming back to the question around, offtake of rare earths. Look, we're having active conversations with just about with someone from every continent. Obviously not Antarctica, but just about every continent. We're having active conversations with people around, when our mineral is available, when our carbonate's available, where that's going to go, how people are actually developing their downstream processing units to take these products, the timing of when they're going to be ready versus the timing of when our project can potentially be ready. But certainly across the geographical areas that are looking to invest heavily in critical minerals, we're seeing really active conversations both through private parties but also through the governments as to how they can incentivise construction of projects in their countries that can take these minerals for processing as we head forward as well.
Fantastic, thanks, Joe. And Brad, if I can come back to you and just touch on one of your earlier points about the value addition things that Jupiter are looking to do. Obviously, the company's been very well established in South Africa and a big part of the manganese industry over there for many, many years now. But it's probably only been sort of in recent times you've actually looked to sort of take that step further and go a little bit further downstream. Where was, perhaps the push in the supply chain? Did it come from your customers? Did it come from a country perspective? Perhaps you can give us a bit of insight as to sort of when you decided now was the right time to push the button on looking at value-add opportunities.
Yeah, thanks, Michael. Good question. So a couple of things. We've got a few shareholders, large ones, POSCO and AMCI, who are active in that space. POSCO's going to be a large maker of cathode active material, and battery grade manganese goes into that. So at a board level, there's foresight, conviction based on some of those shareholders, other investments and activities that fed into that. We're a believer in the long-term macro trend here towards electric vehicles. I think the ultimate shape of that growth is obviously something you can debate right now, and there's lots of factors in that regard. But in terms of vehicles becoming cheaper and better, batteries becoming cheaper and better, that is going to feed into greater demand. And so we've got long-term conviction around that. As you say, we've got a manganese mine already up and operating, so when I talk about investment in this space, it's not in the mine. That mine is there, and in fact, it's already producing as a byproduct what we call low-grade manganese, 30 to 32% grade manganese, and that is the ideal head grade to make battery grade manganese out of it. So part of it is opportunistic. We think we're able to add value to our existing activities, but also vend value into the downstream business because we're able to take existing material where we've actually got 20 years of feedstock already sitting on a stockpile today that isn't saleable through the normal manganese price cycle into steel markets, but is ideally suited into battery grade manganese conversion. So it's partly just thinking about our existing business and how we can leverage greater value in order to build an additional value set for our overall outlook, but also to take that and add value into the space more generally. And then leveraging some of the insights that we have in relation to our overall business, particularly through some of those large investors.
Fantastic, thank you, Brad. And Christopher, if I can come to you as well. A company like EcoGraf has obviously been an established player in the graphite space in Tanzania for many, many years. And obviously at the moment your first port of call is to develop the mine, but you have looked a little bit further downstream as well. And at the moment it looks like almost for EcoGraf that the midstream is sort of the nice little sweet spot for the company to value add to the products that you're looking to produce.
Would you like to repeat your question?
Yep, sure. So downstream, companies that go downstream, at some point it either go all the way to a value-added product, yes. But you're looking to do some midstream production. Can you sort of explain a bit about why the midstream production is the nice spot for EcoGraf to be in?
Okay, thank you so much for your question. First, EcoGraf is said to be one of the bigger producer for graphite in Africa. That is depending on the resource that we have, but also the quality of graphite. The Panko graphite is such a unique product. And we are looking to produce 75,000 tons annually. That is the first 2 years, and then expand maybe 3 or 4 times. So as we want to take so much in, we thought getting a midstream, that is the milling and shaping facility, would let us produce as much and also serve as an African biggest producer for graphite. So if we really want to go straight to the downstream and get to just some few products, we might not be able to save as much as we want. So we are looking to probably have off-takers across the world, and like across Europe, across Asia, and the midstream facility is going to help us to produce as much and give these final off-takers the chance for them to finally go to their product of choice.
Excellent. Thank you. And if I can also just stay with you again, Krista, is that you're looking at these opportunities in Tanzania where there's infrastructure and the availability of infrastructure actually allows you the opportunity to pursue that midstream project in country, which is obviously a nice thing for the people of Tanzania.
Yes. So Tanzania is set to support critical minerals with the recent development of Nyerere hydropower, which serves the whole Tanzania and is capable to give power to all of the industries, but also exporting power to the nearby East African countries. So we have took advantage of that because initially the model was not looking like we're going to do the midstream facility. But when we saw that there is so much power that is produced from hydro, which is a good green energy, it supports our graphite, and also it is very convenient for us to to create as a huge industry of midstream in Tanzania. So I would say, at the moment, Tanzania's president, Her Excellency Dr. Samia Suluhu Hassan, she is creating proper policies to cater for mining companies. For example, our project is located somewhere called in Mhingo. It is a very remote area. But in 2 years, the road has already reached close to our project area, but also they have recently built a substation that is going to bring power to all of the projects in Mhingo. So we're taking advantage of that, and the country is very supportive.
Excellent, fantastic. Thank you there, Krista. And Obadiah, if I can come to you now as well. You know, Nigeria is very well regarded for its infrastructure. In fact, it's almost been one of the pace setters on the African continent for its infrastructure. Has it ever been a consideration for the country to look at Nigeria as being potentially a downstream value-add hub, or sort of a centre of excellence, if you like, for the region?
Yeah, thank you very much. The federal government of Nigeria is looking critically into an aspect of adding value, that's value addition, in the mining sector. Currently, there are about 3 industries that have been opened in Nigeria. That is lithium processing plants, 2 in Nasarawa State, and 1 is coming up in Kwara State. So the extent of this is to make sure that there is value addition after the processing of this, so that our mineral resources will not just be carted away. At least the community, people downstream, would also have a benefit from the mineral processing. So the government of Nigeria is definitely included value addition in the policy that is coming up.
Thank you very much. Simon, if I can just come to you before, I'll touch on the LEO specifics in a second, but one of the questions often gets asked around the junior mining sector is how far downstream a junior mining company can go, because quite often your junior mining company is a single asset company as well. You've obviously been involved in a lot of lithium projects over your career. So what do you sort of see as being, I guess, the criteria that allows you to be confident that a project or even a company has that ability to pursue a downstream ambition?
Yeah, it's a good question, Michael. I think technical competence is probably the first one. You know, we're very good at mining and concentrating, and Australia has a very checkered record in downstream processing, midstream processing. You know, myself, I've worked at smelters across Australia. Most of them are now closed because of overseas competition. It wasn't really competence. Competence in Australia was quite strong, but you know, we had to be viable on a global scale to keep these businesses in track. I think with lithium, you know, flavour of the month, and we're seeing it, you know, with downstream projects developing in Australia, technical competence, a track record, experience in processing is absolutely key for a junior. And you know, what we did with Leo was partnered with a JV partner who had that technical competence. So we weren't going to take it on ourselves, but we were in partnership with a JV partner. So I would sort of certainly steer towards the technical side, more so than the funding or, you know, permitting and those sorts of things. You have to understand in depth the technology of the downstream step that you're undertaking.
Fantastic. All right, thank you very much. Obviously, I should have mentioned at the start that this is an interactive session, and we will have some roving mics coming around very shortly for anyone in the audience who would like to ask a question. But just before I do, Simon, obviously, as I touched on before, your experience in Mali, you know, sort of was a bit of a roller coaster ride over the years, and you know, earlier this year you announced that you were looking to exit the project after the terms of the conditions on which you were going to operate were no longer viable. Are you able to sort of expand to our audience essentially, I guess, the decision process where you felt that it was no longer, you know, as I said, economically viable for you to continue to develop this project?
Yeah. So we have been very public in you know, the reasons that led us down this path, Michael. So, you know, firstly, it was the change in the mining code. I touched on earlier the customs exemptions were removed. That was a small issue. But the long term, we had to operate under the new mining code. That has a much higher government stake, equity stake in the project, so moving to 35%. The acquisition of that additional 25%, the price paid is yet to be determined, but the formula was changed much more heavily in favour of the government. There was other revenue-based fees, so not not profit-based fees, but revenue-based fees, which significantly tilted the economic pendulum towards the government. There was a bunch of others that I won't go into, but those, when we put it all together, the economic return for the company wasn't of a significant enough amount for us to continue. It just wasn't tenable for us to continue. Our JV partner had a very different view because they take the product downstream, so they'll make revenue downstream. And I think this is a key differentiator. Integrated producer, could stay in the company and operate, but for us as a single asset, solely mining and concentrating as our revenue source, it wasn't tenable for us to stay.
Fantastic. Thanks, Simon. And just quick, I should also touch, it's very convenient that we've got Kate sitting right beside you, is that obviously this year from an Australian perspective, we also saw another Australian-based company in AVZ who were in the DRC also have to essentially exit the process of developing a project in that country. Obviously, I'm sure Simon will remind me it's for very different reasons to what happened with Leo. But are they unique set of circumstances that have occurred this year, or does it maybe send a bit of a warning to other companies out there about going and investing on the continent?
Thank you, Michael. Obviously, there are some elements that are unique to those cases, so the particular facts, the particular circumstances won't be repeated, but they're not as unique as you would think, and they do confirm some trends that we are seeing, not just in Africa, but all over the world when it comes to critical minerals in particular. And one of those trends is that expropriating assets, an expropriating project is not as uncommon as you would think. And my practice for the last 15 years has been focusing on that. And I have a team of more than 20 lawyers based in Perth doing that all day, every day. And most cases are confidential, so you don't hear about them, you don't see headlines about them, but they do happen quite often, unfortunately. And in those circumstances, it's when planning really pays out. A second trend that we are seeing in the region, in Africa, is China's increased influential role in the region. So with AVZ, for example, the permit that was not granted to the company was granted to a Chinese company. And I have represented several Australian companies which have had their permits revoked and issued to a Chinese companies as well. So those geopolitical considerations do play a role in the region. And the third point then is that geopolitical risk can be mitigated through investment treaty protection. And it's particularly important for Australian companies because Australia does not have investment treaties with African states, but we advise our clients to structure their investments such that they would have a company in the middle that is investing to the African state and through a country that has that investment treaty, whether it will be through the Netherlands or the UK. And I know there's a lot of skepticism in the mining community about arbitration, about starting legal proceedings against a state, but it's not about that. It's about having leverage during negotiations when there's a disagreement between the mining company and the country, and taking back some of that power, because when you invest in a country and that country revokes the license, all the power is in that country, right? The mining companies don't have any of the power to negotiate, to bring the state in the negotiating table, except when you have that treaty protection. And the reason for that is because it obviously brings that dispute to the international level and every state takes that seriously, but also especially because I've had several states who are negotiating new loans with the IMF or the World Bank, and the World Bank does have a policy where no new loans will be issued to a country unless it makes a reasonable effort to settle expropriation disputes with the foreign company as well. So it's quite important to have that leverage, and I've had clients that have taken back their license and are now developing the project, or at least be compensated for taking away that license.
Excellent. Thank you, Kate. And, yeah, very thorough explanation there. And look, I think just as I guess a quick way to sort of close that part of the discussion off is obviously Simon mentioned before that obviously the experience in Mali hasn't deterred him from looking elsewhere on the African continent for other project opportunities. As I said, it's an interactive session. If anyone from the audience has a question, I'd like to throw it open to the floor now. Just down the front here, we have a question. If you could just introduce yourself and if there's a particular panellist you want to ask the question to, let them know as well. Thank you.
Thank you. It's a very difficult one to actually introduce myself, especially when I have my colleague from Nigeria sitting on the panel. I was actually supposed to be on that panel, and I decided to allow my colleague. So for the purpose of introduction, my name is Engineer Obadiah Simon Nkob, the DG Mining Cadastre, and he is Professor Ige, just for the records. And I just want to add one or two comments about Nigeria, particularly as it relates to Nigeria in terms of where we are. The critical minerals is very strategic for us, and that is why you find out that even now, during one of the conferences, in order to be able to now re-strategize, particularly towards the critical minerals, our minister, in collaboration with other African heads of states, African ministers formed a group that they call African Mineral Strategic Group, of which our minister, Dr. Dele Alake, is the chairman of that strategic group. The essence of that is value add, making sure that our minerals are not taken out of the country without adding value to them. As you are very much aware, Nigeria has started mining way back in the 1903, and when we got oil, we just it was strangulated. And then we now had to reposition ourselves again to diversify into the mining sector. And that is why you find a lot of companies now, particularly the country looks at the Nigerian Geological Survey, which he heads, to be able to now look at critical minerals, targeted exploration. The essence of that targeted exploration is to be able to now have growth and development in the sector, particularly when we know that tomorrow is critical minerals. And that is why we go for some of these international conferences, the future minerals in Saudi Arabia, African down under, most importantly, because at the end of the day, we need to be able to now have these investors, have that partnership, bilateral partnership, and bring in investors. One other key plus for the country in terms of policies, in terms of making sure that at the end of the day, the critical minerals is key, is Jupiter, the Jupiter project, which has Australian companies, major exploration, Australian companies coming up to be able to now start from the upstream, midstream, and then downstream up to the EVs. So the essence is that to be able to now ensure Nigeria align itself with what is trending in the world, and particularly we have abundant critical minerals in the country, and we need to be able to now take advantage of that. Like the Jupiter project has one of the key big deposits of nickel in the world, one world-class deposit in the world, and then even the lithium aspect. So I just needed to add one or two things, and then factories are there springing up, and the country is consciously repositioning ourselves from the 1903. Now we are coming back to want to take over our rightful position. Like you said, we are central in Africa.
Excellent.
And apart from the population, we need to take our position, and we are taking our position as a mining destination. Thank you very much.
Thank you very much. Apologies to the real Obadiah there, because I didn't get the memo that there had been a late change, so I apologize in advance. I should also just add that the Jupiter project you're referring to in Nigeria, not to be confused with Brad's company, Jupiter Mines. Any other questions from the audience? We still have a little bit of time left on the clock. everyone must be pretty hungry then. Is it? Oh, yes, we do. Mozilla down the front here.
Thank you very much. Good morning, everyone. And my name is Mzila Mtenjane, and I'm the CEO of the Minerals Council of South Africa. I think just to add to a couple of things to add to the previous contributor, I was part of the group that actually founded that African Mineral Strategic Minerals Group at the end of the Future Minerals Forum in Saudi Arabia early this year. And I think one of the key motivating factors around that is something that is often touched on, but I think perhaps deserves a fuller conversation going forward. And that is the fact that currently, as we speak about critical minerals from an African perspective, it's largely from a supply, as is often called dig and ship. And there's been a consistent contribution from African leaders about the need for development. And my take is that this is where we've seen a lot of the conversation around, export bans and export taxes and things like that. And I'm interpreting that to be code for, the need for development. The African continent has been a consistent resource for minerals with very little development. And I think there does need to be a conversation from the global north, the first world, in terms of how they see this era we find ourselves in, of the need for critical minerals playing a role in a different development path for the African continent. And I think that's something that could prevent this language of banning from Africa as far as these minerals are concerned. And a beginning of an establishment of alignment, I think, between global north and global south. And Africa playing an important development role, but also one where it's constructively contributing to this energy transition. Thanks.
Thank you. Thanks, Mozilla. Obviously the critical minerals discussion is very broad, and there's plenty to discuss. Did any of our panellists have a comment on either of our two audience members' discussion points there? No?
Yeah, I would think there's no logical reason why Africa can't go downstream further. When I look at lithium, we were looking at lithium spodumene, exported at 6% lithium content. Next step along is lithium sulfate, where you could go to about a 30% lithium content. I don't see any reason why that couldn't happen in Africa. And then the same, moving to the next step, lithium hydroxide. If you think about Nigeria with the petroleum industry, you've got a lot of the skills there that are necessary for a lithium hydroxide plant. Again, if you had the actual technology brought in by the other proponents, you've got most of the skills. You need cheap energy, you need reagents, you need access to port.
Absolutely.
No reason why it couldn't happen in Africa.
Yeah. Christy, you had some comments too?
Yeah, I had some comments, but I just wanted to respond to one of our fellow panelists. So I didn't get a chance to say something at that time, but I want to add, I heard her speaking about when we get to sign these agreements, we should look on the countries which have the treaty that for protection purposes. Fortunately, I have managed to work at different levels with companies which are critical minerals companies that are signing agreement with the government, but also I've been on that side where my client is in arbitration with the government, and I've participated in all of these negotiations to assist my clients. And what I've just noticed, it's not about just trying to protect ourselves when we come to disagreement. If we really want to discuss about the critical futures, we have to try and how do we make mining companies and the government meet at a stage where they understand why the government gets to a stage they want to revoke somebody's license. If you check properly, you just find it is the prices issue. So say a company has held a project for a long time and they didn't manage to produce because the market was down, or the prices were really low. And so they tried to wait so that the prices go high for them to go ahead with development of their project. So how do we sit together with our governments? Because like most of people now know that they'll either open some company in UK. So if I have EcoGraf, I would want to sign a framework agreement with the government. I'll go and open EcoGraf UK so that if I get into any issue, I can easily go to international arbitration. But that is not the purpose of the critical future. The purpose is for all of us to see how do we merge internationally, like Europe, Africa, Asia, all of us to understand how do we not get there? How do we not get to revoking of the licenses? So like volatility is an issue. How do we make the prices pattern easily understandable by everyone? But also how do we make off-takers and bankers get the confidence together? Because off-takers want to see that you have the money to develop. And unfortunately, bankers don't want to give you money until they know you have off-takers. So how do we sit together to make sure all of us are on the same page?
Excellent, fantastic. Thank you, Krista. We are approaching near the end. We might have time for one more quick question if there was anyone in the room that wanted to sneak one in. Oh, one just here. Oh, if you just wait for the microphone so we can hear you.
My name's Ashton Robinson from ANU in Canberra. My question is to Kate. I'm intrigued as to what the impediment seems to be to Australia actually engaging in treaties across Africa and companies being obliged to resort to the strategy that you outlined in your comments. Is there some big elephant in the room that prevents Australia doing what so many other industrialised countries are doing?
It seems to be a federal policy in the last several years that the government does not favor investment treaties and entering into investment treaties with foreign governments. And that, I guess, stems from one particular case, Philip Morris versus Australia, which was the first case against Australia under an investment treaty and related to the tobacco packaging. And that case was an abusive process in investment treaty arbitration. And I think that left a bad taste in the Australian government's mouth and stopped negotiating any additional investment treaties. But there's obviously change in government policies, and going forward, I think we're seeing a shift to more favorable look to investment treaties.
Thank you. All right. Well, the clock is now ticking into negative, so we are over time. So, would you please join me in thanking our fabulous panellists?